Hey everybody, and thanks for joining us here at the Security Token Academy. I'm Adam Chapnick, and we are talking today to Dan Doney, CEO and co-founder of Securrency, about the future of the security token industry. Now, quick note, if you want to see our amazing in-depth interview with Dan, check out securitytokenacademy.com and look around for it. It's there, and it is awesome. Okay, Dan, thanks for being here.
Thanks, Adam.
Okay, so let's talk a little bit about the industry, but first, tell everybody, in short, what is Securrency?
Sure. Securrency is a company, we're a tech company, that set out to layer compliance and security over blockchain networks to be able to tokenize securities. So we provide a one-stop shop for issuers to walk through their token offering, to build in and bake in the compliance framework, to issue their tokens, to allow them to trade, and then ultimately to do the government reporting required for a securities offering.
Amazing. And it is amazing. And as again, I was saying, check out all you can check out about it on the other interview with Dan. But for now, we're going to talk about sort of your views on the industry. So last year, which was 2017, there was a big sort of frenzy around ICOs. Now, how do you see the STO industry, the security token industry, as different from that? I mean, there's obvious ways, but what's your thinking?
Oh, yeah. Well, so look, if I'm honest, and I don't mean to cast aspersions here, but the ICO industry was largely about avoiding securities laws, and there was a thought, perhaps, that it was a new world and that compliance didn't matter. Along with that approach, unfortunately, the laws are there for a reason. Investor protection is a key component of the regulations. You saw a lot of abuse in the system, and the key issues with ICOs, largely across the board, was lack of investor protection and sufficient risk disclosure. So that's an important part of offerings, is that folks are required in a securities context to properly disclose risk. There was a lack of common security standards. So for example, we've subjected our platform to PCI DSS certification. PCI DSS is a robust financial services auditing protocol with independent vetted independent auditors who come in and verify the security posture of your system. It's rigorous. It takes a long time to get through this. It's required for a credit card industry in order to do it. The crypto industry has no parallel to this. And so some folks, they may be very smart, get into the market without sufficient protections, and it's estimated 10 to 20% of value contributed to ICOs gets utterly stolen. So the track record of ICOs, again, because of lack of investor protection, you see many frauds. Again, an estimate of 8 out of 10 being either insufficiently vetted or just altogether bad offerings. The security token model very much is a different framework. It is a model that emphasizes the good things that we know about securities. The regulations are there for a good reason, namely investor protection, fraud prevention, and by embracing those rules, where many folks in the ICO world were looking for ways to avoid them, we embraced them. We ran right towards them, and we figured ways to automate those specific rule sets. You get an environment that's safe for investors, that's healthy for issuers because they have an easy framework to get to market, that insurers can actually come in and help to de-risk the model, as we're working with some major insurance companies for the same basis. And ultimately what that means is institutional money can come into the space. If you're a pension fund manager, you can't go into a space where 20% of the value is stolen and 80% of the value is not ready for prime time.
No.
So by creating an environment that embraces the rules globally, you create a place where the big money, the value from institutional investors, as well as the little money from mom and pop, can come into a safe place and invest.
Yeah, well, that's clear. Okay, so now that's the STO versus the ICO. What about versus the cryptocurrency market? How's STOs differ from that whole world?
We came into the market with an observation, and this remains true. Unfortunately, Bitcoin's price is down significantly. We're hoping for a rebound here shortly, but cryptocurrencies have been quite volatile. And the reason for this is fairly straightforward. Their value is their utility, and that's somewhat subjective. So you see speculators in and out, and you see prices go up and down. What that means is it's a great way to transmit value, but it's not a good place to put your money at rest. And so the big difference for securities token offerings is traditional investment opportunities can exist in this space. It can give investors who have a growth appetite an opportunity to participate. For folks who have an income appetite, who want stable income over time, it gives them an opportunity to participate in this market. So it's pretty different from the cryptocurrency world. They work together.
Yes.
So we accept, of course, with securities, Bitcoin, Ethereum, they fit together, but they all ride on blockchain networks, but they're very different in terms of the instruments.
Yeah, no, that was a great explanation. Okay, so you guys have an unusual place in the ecosystem where you actually work with and understand a lot of different blockchains. Can you speak to how sort of some of the major ones that we've all kind of heard about, how they are different? Because a lot of people don't even know that they are different.
So early on as we began building our platform, we recognized that there's going to be considerable evolution in distributed ledger technologies. As we saw, even in 2015, the core ledgers, Bitcoin's blockchain, was a slow, powerful, very cool, brilliant model, but slow.
Yeah.
And that for many transactions, it was insufficient. Of course, there's Ethereum, and on from here. We saw a need to be ledger agnostic, and that was to build security and compliance over any distributed ledger technology, such that we could engage in token offerings on any of those. Now, we have opinions, certainly, about which ones are most favorable. We love Ethereum, of course, because of the broad base of wallets. It makes it easy when you issue tokens within the space to get to many users on the Ethereum network, but it is slow and it is expensive. We love GoChain. So GoChain is a much faster version of the very same. We've shown that we have the ability to do token offerings on the GoChain network. We're exploring EOS. We're excited about where that's going and the potential to do some things that aren't easy to do in Solidity in the EOS network.
What's the difference between sort of the EOS blockchain and what it can and can't do versus, let's say, the Ethereum or the GoChain?
Yeah, so there's a couple key differences. The first is the way it's governed. It allows for more speed, and it allows for more faster adaptation in the model. And GoChain and EOS are the same in this, but Ethereum being truly, purely decentralized, it's harder for it to adapt.
Sure.
And its model for consensus is different. And that limits its ability to be fast. They're working on that, but because of the governance model, it's going to take some time for that to be addressed. By the way, there are some really promising things. We're keen on what Microsoft is doing with Ethereum there as they're moving to proof of authority. That significantly increases the speed of the Ethereum network, and so we're watching that closely as we think that's an interesting development. EOS, the fundamental difference between GoChain and Ethereum from the EOS network is the way that the smart contracts are developed, which it is more traditional programming language. So. And with data tables in a more traditional way. So the trouble, there aren't that many Solidity developers out there, and they're in high demand, they're very expensive. So it's much cheaper to find developers in traditional constructs to build out more substantial dApps on networks like EOS as that evolves.
Distributed applications, so, yeah, just for the
Thanks,
people following along at home.
Yeah. Now we're real excited, and by the way, we love Stellar. So now this is a very different kind of network from the Ethereum network. It's not smart contracts based, but it has the ability to build in ledger controls directly into the behavior of the ledgers themselves. That allows for a very decentralized model for us to enforce very complex securities laws on those ledgers. They're noted, both Ripple and Stellar are known for their speed, as we can get transactions in less than 10 seconds to clear. That has real value in terms of the transactions and trades that you can perform on the network. So that's beginning on which camp you're in, we use both of these. I don't know if I got to this, but we're really keen on Hashgraph.
No.
We think that is a tremendous new model for, it can decentralize even further with the DAG model, and that will allow for far greater speed in the long run. And the ability for us to port some of our logic into that network is something that's coming soon.
Wow, okay.
Now, I want to finish on this, and this isn't meant to be an advertising piece, but it's just a word of advice to folks.
Yeah.
Don't bet the farm on any ledger. Things continue to evolve, and as we see quantum computers come online, you're going to see continued evolution or need for evolution in ledgers. Stay agnostic. Don't be a purist on this. You know, it's funny, as I say one ledger or another, all the haters come out. Yeah. We like them all. We're going to show the ability to do cross-ledger issuances here in just a few months. We're going to do token issuances that actually span ledgers, that allow users to actually transfer their tokens across these ledgers, and that allows you to get the best of both worlds. Just imagine issuances on Stellar and Ethereum. When I want the speed of Stellar, I can get it. When I want to reach a broad set of wallets on Ethereum, I can get the same things together. That framework allows you to not have to choose.
Incredible, incredible. So as far as, and this might, I'm not sure if this will belie my cavemanness again, as I want to do, but as far as smart contracts themselves, are they the future, or is that just a component of one ledger that's just sort of going to be a quaint sort of thing we remember?
No, many ledgers use them in some form or another. It is not a passing fad. It is decentralized applications are a magnificent development that came from the Ethereum network. That's going to continue. It is not always the right way to do things, and certainly as a pragmatist, for the next few years, there's going to be logic that exists off ledger. Mm-hmm. And until the performance of distributed ledgers gets up to par with transaction engines, and Hashcraft may actually get us there in this, there's always going to be the need to do certain work off ledger. So what you want is logic that actually flows across on and off ledger models, and frankly, the whole financial system as it stands now, most of it, exists off ledger. So we've taken a stance that we work off ledger just as easily as we do on ledger, and this creates a bridge between the old models and the new. And without a bridge, if folks have to cross an island and can never come back, this world is never going to get to where it needs to go with respect to security tokens.
Yeah, that makes a ton of sense. Okay, so now let's talk about geography. Internationally, I mean, obviously, security token, a lot of the talk here came in the shift from ICOs to STOs because it was who's being compliant with the SEC. Are security tokens going to be taken up globally as just a matter of course? And if so, where? And is it everywhere, or is it just in some places?
Well, the bottom line is a security token, by definition, must follow the laws of the jurisdiction that it's in. And as long as jurisdictions have different laws, you need frameworks that are able to span jurisdictions. Mm-hmm. And so that's an important going-in position. Yeah. And it's likely to always be the case that different jurisdictions will have different ways of governing their behavior. So the way we address this, the way it can be addressed by the market generally, is the concept we call these recipes. It allows you to map in global securities laws into basically reusable, shareable blocks that can run across these ledgers and govern the behavior of tokens across these jurisdictions. Now, there's some fascinating things. When you can move tokens across ledgers, you can also move them across regulatory frameworks. And so we're able to actually issue sort of dual jurisdiction tokens that behave under the laws in one jurisdiction and under the laws in another jurisdiction, and where there's a very deliberate passage between those two. We're working with a company, Quantum Real Estate, to do an issuance that does just that. So, for example, in real estate transactions, when an owner of a U.S. real estate investment trust transacts with a foreign owner, there are certain laws that you incur significant tax events when that happens. Now, you don't want to be holding a token and pass it on to somebody else and suddenly incur a major tax event without knowing that you, in fact, have done this and have to pay a 30% tax, say. So, in fact, by having common denoted tokens, but with different counterparties, basically different rule sets, you know when you're crossing that boundary, right, even though it represents share interest in a similar entity, and it trades with a similar beneficial ownership denoted in the same way. That's a very complex topic, but what I can say is that it's these rule sets that you simply could never do in the legacy financial framework. that are now possible. There's going to be a tremendous amount of innovation here, and it will get to something that feels quite global, even though there's not parity in securities laws.
Yeah, no, I mean, it's, again, from a user standpoint, it's like, of course, that should be the case. Someone should make a thing that just knows when it's where it is. That makes perfect sense. And so, yeah, I can see that. So now let's talk about when you think the industry is going to kind of hit its stride. There's been a lot of expectation put on it, a lot of predictions, but you're deep in it. So what's your sense of the wave? How soon till it's really
many
crashing?
folks have said that 2018 is the year of the security token. That's probably not true.
Yeah.
2018 is the year that people really begin to understand how important the security token is. We can speak from experience. It really, from the time we realized that this was a game-changing concept in 2015, took a while to mature. 2019 is undoubtedly the year of the security token, as is where we and others bring these kinds of offerings to market. It's transformational in terms of the impact. There's an estimation that there will be $2 trillion worth of value in securities by the end of 2019. That may or may not be. I think that's a pretty good estimate, frankly. Wow. It may be a little high, maybe a little low. We'll see. But certainly within the following year, it will blow well beyond the $2 trillion value. Our specific target is the alternative asset marketplace, which is all hedge funds, all real estate investment trusts, all private placements. That's a $10 trillion industry easily and beyond just in the US. We see that falling very quickly as these are so much more efficient, so much more powerful as financial instruments than their predecessors.
Yeah, no doubt. So something that we talk about here, we are the Security Token Academy, now, is the value of putting security tokens where they weren't available before, making liquidity possible where it wasn't before, which, you know, there's even a term for it now, the liquidity premium that's going to be added to a lot of these kinds of assets that you can apply to. What do you think, is it possible to kind of say, I think there's a liquidity premium of X when you put in a security token, or is it going to vary like by actual specific asset or by class or anything like that?
Well, look, so actually the truth is the liquidity premium varies over time. So I've heard many folks suggest that we may face a liquidity crunch here over the next couple years. Certainly when that happens and it's much more difficult to move your value, there's a significant premium. And in times like this, certainly in 2018, liquidity was more important than yield. Mm-hmm. Now that varies, again, according to market conditions in terms of that. If in fact we go through a crunch, you're going to see a significant liquidity premium. And assets that are not securitized, people will deeply regret the fact that they don't have the ability to move their value efficiently within the framework. So, yep, liquidity is one of the principal benefits tied to this. I want to get to a different principal benefit, Adam, if you don't mind. Accessibility is another major benefit of these models. So, for so many people in the world, they don't have access to sophisticated financial tools. What this affects, it affects people in a very day-to-day operations. Our first issuance, our first security token, is and was a micro-lending pool for developing world farmers. Developing world farmers see interest rates anywhere from 80 to 200% based on very informal lending models associated with this. Bringing sophisticated, low-cost, securitized lending models all the way to the edge of the world changes lives radically.
Yeah.
So when you can do these things with the global reach of blockchain, we can transform economies in ways that just people can't even imagine. The kinds of things that relief organizations really hope to do, we think are going to be very possible in the near future. So it's a radically different sense about what's about to happen here.
Amazing. So given all of these different things that security tokens can accomplish and places they can have an impact, where do you see the industry going? What is your picture of it maybe in 18 months? Yeah,
there's a lot of maturity to be done. There's a couple key issues that folks are going to need to address at scale. Custody is one of those to reach full maturity in this. But you will see, I'm confident, certainly within 5 years, probably within 2, almost all private placements following this path. And obviously that's tremendous value. There are significant benefits to investors in this path. Another significant benefit that we didn't talk about is much lower cost operations. So this automates, because you're built on a transparent immutable ledger. All of the government reporting functions, all of the transfer agent functions become very efficient and easy to do.
Sure.
What that means is it drives substantially down the cost of doing an offering.
Yeah.
So that allows a lot more innovation within the space. The big problem with securitization in 2008, aside from lack of transparency, was too big to fail mindset, where you had $100 billion value securitized instruments. When they failed, it caused systemic issues. When you can drive down the cost of taking an offering to market such that you can have a mortgage-backed security offering at the $5 million, $50 million level, and where folks can innovate in the efficiency with which they put together these portfolios, because you've made the cost so low, you see a decrease in the total cost of capital, and that's a big deal ahead.
Amazing. Okay, so finally, any comments on the Security Token Academy as we try to cover or facilitate the industry?
Yeah, so look, we're across the board, all of the folks who are engaged in security token offerings are taking on an ambitious task here of revolutionizing the way that finance is done. It requires us all to work together. There are many players in this space. There needs to be many players. There are many complex problems that need to be addressed. We need to work together to address these. Major impact on everything that we do is quite possible if we work as a team. That requires folks like Security Token Academy who are educating, and just as much helping us all to come together and find each other and find out about how we can work together. Mm-hmm. So we really appreciate the opportunity to use this forum to get our message out about what we can do, and we look forward to folks who are interested in partnering, to them coming our way, and we'll certainly go to meet them as we look to change the world.
Fantastic. Well, we're happy to help that process. So Dan Doney, we wish you and everybody at Securrency the best of luck, and can't wait to have you back.
Thanks, Adam. Appreciate it.
Okay. You can find out more about Securrency by visiting their website, securrency.com.